You are watching Market Watch, the brief overview of the key events from the world of finance. Apple's quarterly report, published on Thursday, pointed to a much slower slowdown in its profit growth compared to the forecast. This provided support to its shares, thereby significantly weakening the activity of sellers on the U.S. stock market. Nevertheless, it is still too early to talk about the willingness of buyers to actively join the game. Moreover, the risk of another wave of sales remains elevated. There are at least two reasons for this. Firstly, the consensus forecast for the U.S. labor market does not indicate a deterioration in the situation. Data on changes in the number of jobs created in the non-agricultural sector of the U.S. economy will be published today. Attention should also be paid to data on unemployment and average hourly wages. The absence of an unexpectedly strong deterioration in these indicators is likely to put pressure on key stock indexes. After all, the still strong labor market will not allow the Federal Reserve to lower the key interest rate, thereby increasing demand for high-yield U.S. government bonds. At the same time, it is important to keep in mind the growing risk of a force majeure situation, which will provoke a strong wave of sales and may even cause a trend change. The second reason that increases the likelihood of a bearish scenario is the report of the Organization for Economic Cooperation and Development. Analysts of this organization have revised the previous forecast for a change in the growth rate of global GDP in 2024 from 2.9% to 3.1%. The revision of the forecast indicates that there is no reason to reduce the Fed's key interest rate. And although there is no direct dependence here, because we are not talking exclusively about the United States of America, the overall positive dynamics will prevent a decrease in inflation, thereby confirming the expediency of a tight monetary policy. Shifting to the cryptocurrency market, more attention should be paid to technical analysis. After all the fundamental factors that we discussed also relate to the cryptocurrency market. However, if you look at Bitcoin, it becomes obvious that the breakout of support at the 60,000 mark cannot be called false. There was no quick return of quotations, therefore there is a risk of further decline in quotations of the largest cryptocurrency. The first signal indicating the weakness of sellers will be the return of quotations above 60,000, but only their fixation above $61,500 can confirm the willingness to resume growth. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.